Hello, Maverick traders. This is Rob Reinhold, and I'll be flying solo with you this weekend. Ankit was having some internet troubles, so you're just going to have to hear from me today. All right, well, let's get into what happened last week. And before we jump into the economic reports, we had two pretty major things happen. Boris Johnson stepped down as a prime minister in the UK. He was pressured out by his own party, and the market rallied on this. The pound went up and the UK stock market went up. And then the next day, former Prime Minister Shinzo Abe in Japan was assassinated. So definitely not a good week for prime ministers. We heard from the Reserve Bank of Australia. They raised rates by 50 basis points as expected and really didn't do much for the Aussie. The Aussie had a good week last week. We'll take a look at that here in a second. But overall, I think the story is the markets, the equity markets have stopped freaking out and stopped going lower. Now, look, it doesn't mean it's super bullish. Doesn't mean it's super bullish at all. But the risk-off move that we were having that was really intense in the month of June has definitely become more of a neutral market. So let's take a look at what we saw on the calendar last week. We had higher than expected inflation out of Switzerland. We got that RBA 50 basis point hike. And then on Friday, we had two employment reports. We had the U.S. employment report, much better than expected. The dollar really didn't go up on the news. And we had the Canadian employment report, was way worse than expected. However, we didn't really see the CAD go down on that news either. Both of those currencies kind of, after their initial moves, they just mellowed out and didn't really go anywhere. So let's take a look at the charts and the numbers from last week. Last week, we had the equity markets up somewhere between 1% and 3%. The NASDAQ was up about 3%, the S&P up 2%, the world index only up 1%. Crypto had the second profitable week in the last 15. So if you take a look back on a weekly chart on cryptos, 13 out of the 15 last candles are red, and some of them are huge and deeply red. So I am not here to call a bottom to crypto, but the pressure is off at the moment. And we'll take a look at all the charts. The pressure is off crypto at the moment for sure. We saw more deflationary pressures in the commodity space this week. We talked about this last week, and we got gold down another 3%, oil down another 3%. The commodities are starting to tell everyone, hey, recession is likely already here. It's already coming, and it's already here. So let's take a look at the S&P specifically, because there are some really key areas here. Take a look at where we closed on Friday. We are at a major resistance point. This is a huge resistance point. Look, we did put in a higher low off of this little swing pivot last week, but we're hitting up our heads against some resistance. And then even if we get through that, we've got the 50-day moving average sitting right there above it. So I think the best thing you can say about this chart is it's no longer bearish. You can't really say anything past that until we get some more candles. This market is at a tipping point. If this market is truly bottomed, it's going to break above this resistance of 3,900 to 3,950. And it's going to move out of this range and go up above the 50-period moving average. If this market is not done going down, this is about the level that it should get to before we fall apart. I think it's a coin toss at the moment. I usually have very strong opinions and make bold calls like this, but this time I think like I said, it's a coin toss. I have no idea. If we take a look at what happened in the world of currencies, we can see that the Aussie was the best performer last week, up 1.4%. Most of that move came after the RBA announcement, and I'm talking about 2 days after. This was just a nice, strong week for Australian dollar altogether. The euro got obliterated, and the franc got taken along for the ride with it. Euro weakness is a real story coming here. We're getting closer to parity with the US dollar. That has never been there. I want to say 104 was the weakest I saw it back in 2012. As you can see, yen was flat. Dollar was up for the week. Dollar has continued to stay strong. I said 2 weeks ago, everything in me wants to short the dollar, but the chart tells me to stay long. And I'm in the same place right now. I could write you out a beautiful 10-page essay on all the reasons why the dollar should be weakening. The problem is it's not weakening, so my essay would be wrong. Take a look at the CAD. We basically tread water this week, and same with the pound. The pound was down early in the week and then recovered. Cryptos had a very nice week, especially Bitcoin and Ethereum. And what we're seeing here is we're seeing quality. We're seeing the coins that people like and that people think have long-term value, they got bought. Some of the other smaller ones, they didn't really bounce at all. So let's take a look at some more charts, and let's take a look at this next week and see where we are. First thing I need to talk about is that our outlook for the markets, we've been at a -3, which is the most negative you could be. We are now above the 20-period moving average. So we have to go from -3 up to -1. So at this point, what we're saying is it's still a bear market, but right now it's not an intense bear market. It's more close to neutral than it is bear market. If we're able to break higher above that 39.50 area and clear out above that 50, we will upgrade the market. But until then, the market is a -1 at best. Let's take a look at the VT here. Same thing, it made a higher low in the beginning of July. But look, we're heading right up into this resistance area. As I said before, I think it's a 50-50 of whether the market breaks out and runs or goes down and sets a new low. Let's check in on cryptos. Look, we've been very bearish cryptos for a long time, and sorry, nothing has changed here. The only thing that's changed is saying it's not garbage anymore. We were falling 10 to 20% a week, and we've stopped doing that. That's the only thing you can say is it stopped falling. Take a look back in May and June. We had stopped falling for a month before tumbling a huge 40% tumble. I'm not bullish on cryptos here. Yes, there could be a little bit more upside. We could see it all the way up to this 11,000 on the crypto basket. But to me, there's not enough meat on the bone for me to chase this one. There's better places to hunt. Speaking of hunting, let's look at our news and economic events happening this week. We do have elections in Japan on Sunday. This is not going to be something that typically moves markets. The Bank of Japan is not going to change their policy regardless of who is in power. So I don't see this really affecting the Japanese yen much. On Tuesday, we have the RBNZ. We are going to be meeting live for this. So come join us, and we're going to be trading this thing live as it happens at 10 p.m. Eastern Time. On Wednesday, we have US CPI. That's going to be a big one. That is a big one, and that is really going to set the stage for, is the dollar ready to even go higher? It's at a very high level, but if this is much tighter than expected, they're looking for 1.1 on the CPI. If it's higher than that, this dollar is going to crank higher. We do also hear from the Bank of Canada on Wednesday. So there's two central bank announcements next week. We think they're both going to be good trades here. So Bank of Canada, 10 a.m. on Wednesday. And then really, we've got Australian employment report on Wednesday night. Thursday, we have China GDP. And that's really it for the major announcements next week. So next week, our call on the equity markets here is neutral. We have no idea. We'll know later in the week. If we hit that resistance and fall apart, we're back on to risk off. If we can break out above, I think we're risk on. The most likely thing to happen is neither of those. I know that's not all that exciting, but I would not be surprised at all if next week is we just churn around these levels. So we can't really break out, but we're not going to fall apart. I would not be surprised if that happens. If that happens, it's not a great trading environment because there's not that big wave pushing currencies up and down. It's just going to be stagnant. We do hear from the RBNZ and the Bank of Canada next week. Those are going to be good trading announcements. So if you're looking at trading next week and you're looking at this equity market saying, it's really messy here, what you really need to do is go pick the stories. And the story is the New Zealand dollar is likely going to move quite a bit on Tuesday. The Canadian dollar is likely to move a lot on Wednesday. Those are your trading opportunities. Don't worry about what the market's doing. Don't try to figure it out. Just say, hey, I'm not going to really trade the market movements this week. I'm specifically going to trade news reports. With that being said, let's take a look at what is looking the best to trade going into next week. We're going to start off with the cryptos. And as I said, I'm not bullish cryptos, but I'm no longer bearish. Bitcoin has actually climbed above the 20-period moving average for the first time since late May. You could see it did it there, and it didn't really go anywhere. I think we're going to get the same thing. I think we could have a little bit more upside. I don't think we're going to get to the 50-period moving average. So for me, the trend is just a zero here. Now on the short-term 4-hour velocity chart, you know what? It is looking stronger. So I think you can take a look at that for sure. Taking a look at Bitcoin Cash, it is not above its 20-period moving average. So looking at this relative to Bitcoin, stay away from Bitcoin Cash. This thing's a dog. Yes, short-term velocity has it going up slightly, but go buy the better stuff. Ethereum is possibly one of the better things I was talking about. Here's the problem. Again, it's the first time we've hit our head above the 20-period moving average really in months. We can't even go back on this chart and see the last time we did it. We are heading into this resistance at 1300. We're right there. Short term, the velocity score is very strong. So if someone was looking to trade right here, right now, said, I'm going to buy Bitcoin for the next couple hours, okay, that's fine. Whatever, that's fine. I don't think there's a lot of meat on the bone, a lot of profits to be had, but I think that is the right call. And Litecoin, just like Bitcoin Cash, it's weak. It looks like garbage. So stay away from Litecoin. It is not the coin to buy here. Moving into our foreign currencies. Dollar. I said 2 weeks ago, everything in me wants to short the dollar. I was looking for a market rally off the bottom, which we got. I was looking for this deflationary pressure, falling copper, falling gold, which we got. All of that should have taken the dollar down. It didn't. And this is where one of the things I'm the most proud of in my own trading experience is that I no longer trade my opinion. I no longer short dollar when I think I should short dollar. I do what the chart says. And the chart said, hey, it's not a short. It wasn't a long 2 weeks ago, but it wasn't a short. Last week, it was a long. And it was one of the better performing currencies this week. So it's a +3 on the trend. It's looking really strong. Everything's moving its way. However, when we take a look at the velocity right now, there's just no velocity. So we think that the dollar's likely to base or pull back before it makes its next run. So longer term, we like it. Shorter term, it's more of a pause. Going on to yen, the yen is right between two moving averages. So the trend is a little weak. Velocity is getting a little weak. Look, you could make a case that the yen is trading here between this 84 and 87. Again, this is the yen basket that we build here. So could this go back down to 84? Absolutely. And I do like the yen as a short this week. It's not great on the trend score. Don't expect it to be a major move like we saw in late May. But I think you can easily see this move a little bit lower in this trading range. And the velocity is starting to turn as well. We have falling RSI. We've got EMA that's about to turn down. We got parabolic SARS. So for me, yen is a decent short. We come over here to Swiss franc. We've got this as a +2. Had a big run off that rate hike in June. And look, we're just having a very deep pullback. This thing could actually pull all the way back to the 123 area, and it would be just fine. It would still be technically in an uptrend. The pullback is gaining some momentum here. So short term, Swiss franc is a sell. I'm not looking to do it. I don't do shorts on +2 trends. I just don't do it. Let's go see if we can find something better to short. Oh, and looky here. Our friend the euro popped up, and yes, this is a much better short. We have clearly broken below this trend line, and we are falling here and falling hard. That being said, look at the velocity. We are tired. The euro moved a lot this week. It's tired. We fully expect there to be a base or a bounce. You want to be selling into that. So early next week, I don't think you touch euro. I think you let it bounce, let it come back up. I think Wednesday, Thursday, Friday, euro is looking like a great short. Next up is the pound. The pound was very weak at the beginning of last week. Very weak. And then Boris Johnson quit and it bounced back. But take a look at what it did. It didn't break any trends. And look at that candle on Friday. That's not even a good candle for momentum. So I'm still in the mindset to short pound on any sort of bounce. And that's what we're getting here. It's at a +1, so I don't want to short it right here, right now. But once that velocity turns down, I think you can sell pound. Canadian dollar looks great. +2 on trend score. Yes, it's basing here. It's been basing for the last 7-8 days. It's only a matter of time before it tries to break out. I think this is going to time very well with the Bank of Canada on Wednesday. And if we get that news that can push this through this resistance, the Canadian dollar can have a big run. Now, that being said, if the Bank of Canada disappoints, it's going to hit this resistance and probably come all the way down to the 50-period moving average. Looking at the velocity score, it's looking okay, but again, we need it to clear out of these levels. So for me, CAD is a Wednesday story. I will absolutely look to play the CAD long on Wednesday after the Bank of Canada report. The Aussie was the best currency last week. And you can see when you take a look at it in this bigger trend, it didn't really do anything. It just bounced back up to moving averages. And on Friday, it kind of failed at those moving averages. The short-term velocity score looks great. So short-term, if someone said, what do you want to buy short-term? It's probably the Aussie. It's showing the most velocity at the moment. Let's finish off with the Kiwi. The Kiwi looks terrible. Everything else bounced last week. The Aussie bounced. And look at the Kiwi cannot bounce. And every time it has a run, it leaves a long upper shadow. That means that every rally it tried over the past 8 days failed. Why do you think that the 9th day is the one? No, I'm looking to be more of a seller of Kiwi. The problem is it's at a velocity score of 0, so I'm just going to wait. But I do like this one later in the week. So let's take a look at where everything was last week and the changes it had this week in the trend scores. So the first thing we have to talk about is that dollar. That dollar strengthened. It was already at a +2 and went up to a +3. We saw Ethereum and Bitcoin come to neutral. Bitcoin Cash and Litecoin are at a -2. We've got the euro falling apart along with the Kiwi. So the euro and Kiwi on the longer term trend are the currencies to see. So over the next month, this is what we like. Again, we're looking a little bit longer term. Dollar, CAD, Swiss franc. We've liked these currencies for the last 3 weeks. They continue to be the ones to follow. Euro and Kiwi on the short side. We take a look at velocity. The dollar moved lower here. It's just pulling back here. It's just in a pullback from a new, again, multi-decade high. We had the Kryptos improve on the velocity score. I still don't like Kryptos long. I want to see more from them, but you definitely have to say they're not shortable at this point. Swiss franc is the currency with the most downward momentum. The yen has fallen all the way from +2 to -2. Pound has improved a little bit. And the Aussie has done the opposite of the yen. It has gone from -2 to +2. So if you take a look at, again, our trend scores are telling us, okay, where are the bigger moves likely to happen? And CAD was one of our strongest ones. And look at this, CAD is also one of our strongest ones in velocity score. Going into next week, long CAD is my #1 trade on the long side. And if we take a look at the weak ones, right here, right now, the Swiss franc looks the weakest. However, it is in a big uptrend. This is just a pullback. I don't like to short pullbacks on daily charts. So the yen is actually my favorite short for next week. So looking at CAD yen long, I could take a look at Aussie yen long. Those are going to be the currency crosses that I want to look at. So here's the table. So basically we got dollar, Swiss franc are on a waiting list. We are not looking to buy them because they are pulling back actively. So that leaves us with the CAD and Bitcoin and Ethereum. I don't love Bitcoin and Ethereum, so I'm sticking with CAD. On the bear side, euro and yen, these are our targets. So let's go ahead and jump into these charts and take a look at potential entries on these crosses. My favorite pairing early next week is CAD yen. So first of all, take a look at this on a daily chart. So we are seeing about the same things here that we saw back in April. We had this little bit of a flag pattern where it's run up and then we get a little flag pattern on the downside and then a massive rally. This is starting to look very similar to the pattern we had in late April and May. I think this coincides very well with the Bank of Canada announcement on Wednesday, and I really like this pair right here, right now. Look, it's in a little bit of a short-term range here, moving from 103.50 up to 106. You can play it all the way up to 106, and if it breaks out and runs, then you've got a great winner in your hand. If it hits that 106 and falls, you've got a mild winner in your hand. So CAD Yen, I like this one, and I would really like to get in early in the week and go into the Wednesday report with some cushion, with some money in the bank, already up 50, 60, 70 pips. That'll make it very comfortable to hold through that announcement. If I'm not up 50, 60 or more pips going into Wednesday, I'll dump the position and I'll re-enter the position after the Bank of Canada announcement. So CAD Yen is my number one trade on the long side. Aussie Yen. We are getting, again, this flag pattern where we had a big run up and now we're just kind of drifting lower, but not really with any momentum. When these things break out and when it breaks that parabolic SAR, I think you're going to see a pretty massive move on this one as well. So these are my two favorite trades for the week. There's really nothing else I like. Next week, I think it's going to be a really tough week. Just check out all these conflicting scores. +3, -1. +2, -3 on Swiss franc. -2, +1 on pound. So look, it's all messed up here. There's really not one currency other than the CAD that says it's a green light go. This is the one. So we have to pair it up against something, and I just don't know really what to pair it up against other than the yen. That is the one that has a -1, -2. It's the only thing that makes sense here. So I think early on in this next week, I think you want to be patient. I think you want to wait, and I think you want to be trading news announcements specifically. To wrap this up, the markets are looking a lot less bearish. They're not bullish in any way, shape, or form, but they're not bearish, which is a huge change. This is a very mixed week here. I don't love this week for trading. I just don't like it. I am definitely going to be looking to trade the RBNZ in the Bank of Canada, and I'm going to try to not trade anything else because I just don't like this setup here. I don't think this is a great week. It's a mixed picture. There's things that are going up on longer term trends and down on shorter term trends. It's really tough to find something that's all going in one direction. So trade less this week. It's beautiful in summer. Go out, do whatever you'd love on summer. Let the market come in and make a better opportunity for us. Then we'll go in and grab some pips. That is it for the Currency Room. Thank you so much for joining me. Take care and have a great weekend. Goodbye.